People often ask what the most difficult aspect of trading is, and to most people that are foreign to the concept of trading stocks, futures, crypto, forex, etc., they're probably thinking that it's technical analysis because there's all these different terms that you have to learn: fair value gaps, imbalances, inefficiencies, external liquidity, internal liquidity, all these different concepts that you really have to learn and master. But in reality, the hardest aspect of trading is definitely psychology. I would say psychology, risk management, and discipline are all very important, but psychology is the one that impacts and honestly hurts new traders, especially the most. Today, I was struggling with my psychology, and I'll explain exactly why throughout the course of this video. And I'll also break down the two trades that I took. One was a winning trade, but it wasn't much because I ended up getting stopped out pretty close to break even as I was trailing my stop loss. And the second one was a losing trade. And it was honestly just a result of me being impulsive on the charts and entering in because I thought I saw something that wasn't even there. These are the stats for today. Like I said, I did have a losing day today. Two trades, only lost $77 on each account though, which is good because I have risk management strategies that I actively practice and incorporate into my trading to make sure that my big wins and even my normal wins are just way bigger than my normal losses. In trading, there's always going to be losses. You're never going to meet someone that has a 100% win rate, maybe not even like a 90% win rate. That's extremely rare and honestly unbelievable. There's going to be losing days because the market just does what it wants to do sometimes, or you might not be on top of your game. You might have a bad entry. Whatever the case is, you're going to lose trades. Today, I ended up breaking even on one trade in about $26 of profit. And on the second trade, I ended up losing $103. Today, we had an unmitigated 1 hour fair value gap coming into the morning session of Nasdaq. So I knew that price because, again, at 8 a.m., we're down here. This is price action for the rest of the day, so I obviously wasn't seeing this in real time. In real time, price is all the way down here at 23,482, pretty much. I'm expecting price to come up here and draw back down lower. The only thing that I didn't know was when that was going to happen. My job as a trader is to wait for this, be patient, get confirmation of a reversal, and then trade the swing down. I ended up missing two trades today, so I'll get into the two trades that I missed briefly, and then I'll talk about why I took the two trades that I ended up taking today. And honestly, it was just poor psychology, but we'll get into all of that later. So again, we have an unmitigated 1 hour gap. We also had an unmitigated 15-minute gap. This 15-minute gap actually coincided with the consequent encroachment of the 1 hour gap pretty much perfectly. So I'm definitely expecting price to tap back up into this range and come back down. But I'm going to scale down to the 1 minute time frame and briefly talk about the trades that I missed because they were honestly beautiful. There were trades that I would take every single time. So coming into this morning, and specifically New York session, we had liquidity that was never swept at 4:30 a.m. So London session lows are all the way down here. New York market opens at 9:30 a.m. So already within the first couple of minutes, boom, we sweep this liquidity and we come back down. On our way up, we have a fair value gap that gets inversed by this candle right here. I'll mark that out for you guys. This fair value gap gets inversed by this candle. We also have an order block that gets disrespected and it becomes a breaker block. So once again, this would be a bullish order block if price was to go like this, tap back into it, and make a lower low. However, it did not do that. It went higher. It disrespected the order block, so it becomes a breaker block. Breaker blocks, especially within this context when you're sweeping liquidity, can be an extremely powerful confluence. And when you match them up with other confluences, there's a very high probability that your trade is going to hit. So we have a breaker block paired with an inverse fair value gap. And then right when this candle closes, pretty much, we're already almost at a change in the state of delivery. So ideally, what I wanted to do was enter off the close of this candle with, I think I had a 16 point stop, and I targeted a 1 to 2 at these, I think it was over here. Oh yes, it was actually over here. At this short-term high right over here. Wrong tool. We had some equal highs right over here, and I was going to target those. So my take profit was right over there, and I had a 1 to 2, sorry. So I think I actually had a 17 point stop. I ended up missing out on this trade though because of Topstep. I clicked market execution, but for some reason it put me in a limit order, and by then, within a couple of seconds, price was already all the way up here, which was almost 10 points away. And I was like, no, if I enter here, I'm gonna have a terrible risk to reward, because say I still want to have my stops at that same place, I'm pretty much just getting a 1 to 1, which is fine, but I like to trade 1 to 2s. I like to have a good entry because that gives you a better RR, it gives you a better probability for your trade to hit, and it also gives you more conviction because I'm entering off of all of these confluences delivering at the same time. This closing candle that invalidates this fair value gap, the breaker block, the change in the state of delivery. Price ended up retesting it, but I didn't end up entering. So that's one trade that I missed, where I would have caught probably like $600 on both my accounts. Second trade that I missed was this one, and this actually used some standard deviation levels for this. So coming into here, we had this huge swing upwards. I took a standard deviation tool and I calculated out that entire range. Price usually likes to reverse at the 0.79 range of a move. It likes to retrace to this level, and then it usually shoots way back up. So what I was going to do was try to catch a trade for this one. We had swept these points of liquidity before. This one got swept by this candle at 1032. This point of liquidity got swept over here at 1050. Oops, sorry. And then we put in this short-term high. We put in this short-term high. As you can see, we went back down with the next candle, and we came back up. That is manipulation. So what do I do with manipulation? I like to calculate the standard deviation of that range. And when I do that from here to this short-term low, what do we have at exactly that 0.79 level? Let me make it a little bit wider for you guys so you can see it easier. But pretty much exactly at that 0.79 level where price likes to retrace, we have our profit goal. So I had a limit order set at this fair value gap, hoping that price would retest it. I had, I believe, a 20 point stop, and I targeted a 1 to 2. Oh no, it was. So I had a 20 point stop and I just targeted a 1 to 2, because sometimes price goes within this 0.62 range and it doesn't fully hit 0.79. So I just wanted to play it safe and just go for this point of liquidity right down here. I always like to have my take profit a couple of points away as well, just in case, but ideally I was expecting this to get hit. With a limit order, it only enters your execution in if price taps back into this range. So my limit order was right here. I'm expecting price to come down, tap back into this area, and then come back down. However, I never got entered in because price clearly never went back into that range. It never triggered my limit order. So already within a couple of hours of market open, I've already missed out on 2 trades where I could have made thousands of dollars on both my accounts. Psychology wise, that is fucking me up, because I'm like, okay, I could have been so much closer to my profit goal, but I ended up missing out on both of these good trades that I generally would take a lot of the time. So moving forward, that honestly caused me to be a little impulsive. I entered up here. I think it was this one, yeah, and on a pretty similar model, honestly. So with a market maker sell model, we're looking for a sweep of liquidity, which we had right over here. We swept that liquidity, and what did we do? We came back down. So we swept it up here, we came back down, and we swept it again. That is manipulation. we always want to look for initial sweeps of liquidity. We want to exit that zone to come back down below the previous liquidity, come back up, sweep that internal liquidity, and then we'll look for moves in the opposite direction. Okay. So, now that it's working, we sweep that liquidity with this manipulation leg. I'm going to do a fib retracement of this entire manipulation leg. And you can see our key levels. -4 is right at this short-term low. It's right at the sell side liquidity, and there's actually a few points of liquidity down here. Standard deviation is such a powerful tool because it really just gives you confirmation on where to place your target profit. And you can also see that all of these things align with each other. This entire huge range upward, a -4 of the standard deviation from the last manipulation leg that swept liquidity brings you exactly to this key level. However, for my trade, I ended up taking a short at this fair value gap. I don't remember what I had actually. I believe I was targeting this entire range. No, just this one, I believe. Right in between this -2 and 2.5 range. And I just had a 1 to 2 static RR. I ended up risking $275, I believe. And I entered right off of here. Let's get into why I entered. Again, we have an initial sweep of internal liquidity at this high. We're also trading out of these bearish gaps. Remember I said price was going to come back up here? It did. And it also tapped consequent encroachment of the 15-minute gap. We inverse this fair value gap. With this candle close. And I also was counting on these two as kind of being a breaker block. But honestly, with our fair value gap, we never displaced below that order block. When you're trading a fair value gap and breaker block combo, which is also called the unicorn model in ICT, you really want to have your fair value gap displace below. You want to see your displacement candle be a fair value gap. And unfortunately, that did not happen for me. But I was pretty impulsive. I was looking to catch something. I was pretty confident because I had standard deviation ranges that, supported my trade, with these -2 to -2.5 ranges, the -4 being down here. I was really expecting price to come back down. And as you can see, at one point I was probably $300 in profit, but it ended up coming back up and it stopped me out at break even. So, I obviously got stopped out of that trade once it reversed back up, right around over here, I believe. But it's okay. Then, being quite impulsive, I entered again not even an hour later. So I saw some low resistance liquidity over here making a trend line. And the second we closed below this trend line, I entered shorts, but because of risk management, and I know this is stupid. I already know. Don't tell me. I already know. I traded with 10-point stops, and I only risked, I believe, $100 because I sized down significantly. I only traded 5 micros, and I was still confident on this sell side liquidity getting taken out, but I was just too impatient. This is a model I never trade. I never trade trend lines. But I honestly was scared that I was going to miss the initial move because, again, I knew this sell side liquidity was going to get taken out and I didn't want to miss it. So I just hopped in. Terrible, honestly, execution. No confluences. Literally just a trend line getting broken, which is terrible. I got stopped out for $100, putting me at -77 for the day. And then what happened? Price came back up, honestly outside of these fair value gap zones, which I didn't expect, but then it immediately dumped and it took out all of this sell side liquidity that I was expecting price to take out. So the big move that I was talking about ended up happening. Tap into a fair value gap, and we ended up coming back down. But there was just so much retracement within here that I kept getting faked out. I honestly missed those first 2 trades. It fucked with me psychologically, and I just made a bad decision. I'm going to keep that in mind moving forward. I still have tomorrow and Friday to trade as well. Fridays are usually low probability days for me because I don't really like the price action that I generally see on Fridays. So most Fridays I don't take trades. Like the last 3 Fridays in a row, I did not take any trades. So we'll see. But tomorrow I'm going to go into the market with a clear mindset and honestly just do a little better and try to secure some more profits on the way to becoming funded.